as bond investors have their focus concentrated on short and mid-dated securities. Meanwhile, analysts say the close of today's T-bills auction will induce post-auction rally as unmet demand filters into the secondary market. Now, Chuka Nwachukwu, the head of asset liabilities and management and also balance sheet management at UBA, joins me now for more market updates. Thank you so much for joining us on the show today, Chuka. Let's start off really now with today's T-bills auction, the volume 217 billion naira, the expected outcome and how this would also trigger some post-auction rally.
Yeah, thank you, David. Like you mentioned, we have 217 billion worth of T-bills on offer today. The last auction came out about 2 weeks ago. In that auction, we saw about 251 basis point drop from 7.3, I beg your pardon, on the longer end to 4.78. This bill is currently trading around 2%, 2.3%. That's also, we hope to see a significant drop again at the stop rate of today. So between, we're looking at between 2% to 3.5%.
And talking about the bond segment now, we are seeing the fixation around the short to mid-term securities now. What's fueling this interest? And according to your report as well, the T-bills market has been tepid this week. How long will this also last?
Yeah, so on the bond side, that's where we actually have a lot of the activities. We've seen the bullish sentiment associated with a high level of liquidity in the system. For the past many days, the system has opened above 800 billion. Today, open above 650 billion. And so, because of the low yield on the 1 year T-bill market, there's a lot of interest on the shorter end of the bond market, especially the 2024 and the 2025. So, this bond is currently trading around between 8 to 9%. And so, why buy a T-bill for less than 2% when you can actually invest invest in bond that is almost about 18 to 2 years maturity at 9%.
Let's also tilt our attention now to the FX market as well. Today's court injunction really has welled up a whole lot of sentiments looking at the Naira redesign policy and whether or not an extension is the right way to go. But in terms of the supply and demand dynamics we've seen so far, what are the intricacies playing out at the FX segment?
The FX market has remained the same, especially on the INE, where we were currently trading around 461.5 levels. The demand is still the same, supply is still the same, nothing really much has changed, and that's why we see that the rate has remained stable. So the court injunction or court pronouncement really did not have any effect on what is happening on that market for now.
And also looking ahead now, next week we're expecting another bond auction as well, looking at the volume at around 360 billion naira. In terms of the expectation and outcome that we expect from now till the rest of the week, and then looking up until next week, what surprises should we look out for?
Okay, so let's look at the rest of the week. We expect to have the result of this NTB auction around within the next 2-3 hours. And so, obviously, like I've mentioned earlier, we expect the yield to drop. Yeah. Going through the rest of the week, the pattern, the result of this auction result will affect what will happen in the rest of the week. We expect that those who didn't win at the auction will come into the secondary market to fill their orders, and that will also impact on the yield curve. Like you mentioned, next week Monday is bond auction. 360 billion is on offer. The last time the subscription was well over 800 billion, and about over 600 billion was sold. So we expect to see that pattern, especially on the shorter end, which is the 28, which is the shorter of all the bonds in circulation, on auction next week. And so we will see a lot of activity at that end.
And in terms of market liquidity, system liquidity has always been a major concern for us too.
Yeah, but so far the system has been pretty liquid. I should think that before the end of, before the election, which is on the 25th, the first election, the fact should be out, and that will also add a lot of liquidity into the system. And so with that, we see a lot of bullish sentiment on the fixed income side of the market.